Good afternoon. This is Ken Long from Tortoise Capital with the review of the weekend trading reports for June 4th, 2016. We have a market that remains in bullish normal on an annual basis with weekly RSI 14, 61 out of 100. That's relatively high reading compared to the last year. On a 10-day basis, using the 10-day NDX, we are overbought, 89 out of 100. In the market mosaic, price with respect to the 200-day moving average is green bullish, 5.22%. Slope of the 50 has improved to white bullish, 0.31. ADX has crossed back above the threshold of 15. It's a neutral trend, but the bulls are in charge. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. We are at 1.049, so we're into risk on conditions. Take that score of 1.049, compare it to the last 5,000 trading days, find the average and the standard deviation, and we come up with a risk Z, which is 0.48, and this is a 90-day histogram of that indicator. We've had a double bottom here at maybe 0.5, minus 0.5. They've now tipped into the positive zone the last time it did that. This was a really nice swing move to the upside, both in XIV and in equities. We're so near the top, all-time high, however, we are cautiously optimistic because of the channeling nature of the market in the last 6 months and the fact that we're in an election year. So we're taking that positive turn under advisement. These are the current holdings for the blended monthly rebalancing, and then the winners as of close of business on Friday. ETF2 remains 100% exposed in the theoretical model and in the model portfolio. Quick look at the several of the blended monthly portfolios. Latin America and Brazil both staged a nice comeback this week to remain at the top of the blend. Japan lagging, but everything on a buy signal. That's positive. Then in ETF Max, the miners, precious metals, blended commodities, Peru, some Brazil, lots of Brazil, even New Zealand creeping in. So got some favorable coverage of the emerging markets now. In the S&P 500, it's energy dominating with basic materials, wind resorts, Freeport and Rand. There's a nice rebound here in Newmont Mining and in Southwestern Energy. In the market health check, the vertical blue lines are 10, 20, and 30 days worth of look back. The horizontal red lines are support levels that used to be resistance. The purple line is the all-time swing high in the S&P up here around 212. That's the upper target. At a double bottom, held support at 204. Now the dragon is up. The river is slightly turning up, and price is now north of the dragon, and then the floodplain pushing higher. The last several times that the market has tested at 211, there have been sell-offs, but this last one was so mild that perhaps this is the time. Still a comfortable distance above the 200-day moving average, which is stabilized because of the sideways nature of this market. Jaws of PPO are open to the upside, and we've been overbought for 8 days. So room to go. Initial target at 212, and then beyond, I would take it as another one of these lengths of the, like a floodplain's worth of distance, so maybe another 8 points to the upside would be the next logical move. if this all-time high fails to suppress. ETF2 regional report, everything is on a buy signal. The S&P at 28 is better than the globals at 25. Inside the U.S., it's mid caps, small caps, large caps, and tech. Which leads me to think about the possibility of some tech value plays if the market continues to maintain. Two strongest sectors, Latin America and U.S. mid caps. Two weakest are European 350 and tech. Utilities, energy and materials showing strength in the sectors. In the broad markets, most of the U.S. below average with the exception of the mids. India, Thailand, Philippines above average. Everything else, Asia, is low. This is just showing you that the strength is really in the alternate asset classes, energy, commodities, real estate. The ETF2 lens shows the same kind of insights as blended monthly rebalancing this week. Metals and mining continues to dominate. Gold, silver, energy, natural gas, commodities are dominating. I like the U.S. real estate's holding position in here. Dow 30, Chevron, Pfizer, United Health at the top. Now we've got 5 in the Dow at the bottom. Nike, Apple, Disney, Microsoft, GE. So I'd be looking at Apple and Microsoft as potential value plays once they find their bottom. American Express is white and yellow, so that's early in its rebound. Weakness would be these that are in the yellow followed by white. So Tech, McDonald's, Home Depot, Verizon weakening along with Caterpillar. Shifting to the daily. Not many patterns to choose from. There's a 5DD in Nike, however, a handful of dojis. Lots of frog quality numbers that are favorable. 5DD in the VIX. Again, lots of frog quality numbers that are favorable. Metals and mining just keep standing out to me, as is Brazil. Not much to choose from in the auto framer. The regression line fractal framework gives us the relative strength winners and losers in terms of their own ATR compared to fair value. And the daily squeezes has a couple of interest here with Apple and the VIX and Ford. Day regression line is up. Parabolic is up. Crossed its own 10-period moving average. It's now moving slightly above the 6-month average. It'd be nice for the longs if the bulls if this actually held. We are, as you can see, pushing that all-time high again. Of course, we've done that before too, and had this, so we will be careful. Z-scores of the regression lines. The 30 has rolled up after bottoming out here at the -1Z. 10 did as well. The 90 has rolled over, cooling off a little bit as we get this sideways chop in here, but it is holding here above the 206. Now resting on the top, on the north shore of the river. Let's see what we can get. Of course, it did that up here too. That's everything I wanted to cover. Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.